So here we are looking at the daily chart for HRID. I want to get this one up as three things caught my eye with it. So that's where I'll start the video, and then we'll just go over some supports and resistances. But the first thing is simply just the general context, which is an uptrend. Now what allows me, and where's my proof that this thing is in an uptrend? Well, the easiest way is if we look at our moving averages, you can see the 10-day, the 20-day, 50-day, and 200-day all have an upward slope to them. You can see they all have nice distance between them. In any chart, whether it be a penny or a big board, any of them that's got these four moving averages pointed upwards with this sort of space in between them is going to be in a nice overall uptrend. So that's the first key thing, is what is the overall context for HRID? It is uptrend. The second thing is the risk versus reward has been tilted in our favor. How is that possible? Well, we're in the middle of a pullback here, and not that there's anything wrong buying during upwards moves, when the overall context is an uptrend, but to get the best possible entries and to get the risk versus reward entries, it's better to buy during pullbacks. So that's number two. And the third reason is the chart has the ability to move off bounces. Again, what gives me the right to say that? Well, if we look here, on what day was this? This was on the 6th of February. You can see that the price, originally made this big move, had the pullback here, but then on this day here, it closed at 0.081 hammer candle, and then check out this bounce, went all the way up as high as 0.133. So nice percentage move here on the bounce. Again, what is my point here? My point is the chart past history has shown us that this is possible. Some charts you have a big move up and then it just completely runs out of fuel and ends up right back where it was. But with this one, you can see here past history has shown us that this does contain the ability to be able to bounce and produce nice moves like this. So three key things that really have caught my eye. So now in terms of support levels, the first one that I'm going to keep an eye on is at 0.077. This is just based on the close of this day back here on February 1st. So I'll change that to green. I'm going to leave it a skinny green line because while it is a support, yes, by no means is it the must-hold level where you got to freak out if the price falls below it. In fact, the price closed right at 0.077 today, so right on top of the support level. A little bit more important level of support is down here at this gray line here, this being the 20-day simple moving average. That's valued at 6 cents. So again, let's say the price were to come down here and find support before heading back up, you can still see that it would be in the overall uptrend. Higher lows is the name of the game. So that's the key thing, and as long as this 20-day can hold, there will be higher lows going forward. In terms of resistance levels, the one area that I'm looking at is going to be based on the high of these candles over here, which is right at 10 cents. You can see here a couple of times bumped its head on it before finally getting through, but you can see when it was able to break through on this day, it really shot up. So now that the price is back below it, it has flipped from a support back into a resistance. So 10 cents is going to be the first level of resistance, and then after that one aren't any other resistances until these previous highs. So again, with the 10-cent break, given the past history, the price could really get moving, quickly once again. And then finally, just to end on volume, you can see that this big volume day here corresponded with this, big move upwards. And then since then, during these two pullback days, you can see both volume days have been less. So if the price does continue to pull back some or go sideways, the less volume, the better on those days. But if we do start to see some upwards action, that's where, the more volume, the better. So always keep that in mind from the volume analysis standpoint. Again, sideways or downwards, the lower the volume, the better. If it does start to head back up, that's where you want to see as much volume as possible. So if there are any other questions on the chart, please let me know. But again, in a nutshell, the three key things that caught my eye: overall uptrend, risk versus reward because we're in the middle of a pullback here, and then past history of the chart shows us that the price can bounce. And then we have 0.077 and the 20-day simple moving average as our two key areas of support, 10 cents, and then we have a couple other ones up here on the resistance side of things. If there are any other questions, please shoot me a message. If not, again, this was HRID. Thanks for listening.